Welcome back to Investing Talk Podcast.
Today we're looking at Immunitybio.
As usual, before we start, subscribe, like, and comment to this video to support the show. Now, let's jump right into this deep dive.
Yeah, I am really excited about this one because we are looking at a company that is going through a massive inflection point right now. I mean, here we are in February 2026, and Immunitybio is pivoting from this, pre-commercial biotech full of potential into a legitimate revenue-generating oncology platform.
Revenue generating being the absolute key phrase there for you listening, because if you look at the chart, it has basically gone vertical. The stock rallied 42% recently. And, as the resident skeptic here, my alarm bells immediately start ringing when I see a move that explosive. It screams hype train.
Right, which is completely fair.
So is this actually a sustainable move, or are we just looking at a classic sell the news event where retail gets left holding the bag?
It's a great question, but I really don't think this is a sell the news moment. What we're actually seeing is a fundamental repricing of reality. For the longest time, this was just a U.S. story, but they've recently moved way beyond that into global territory with some massive regulatory wins in the European Union and Saudi Arabia.
Okay, so let's transition into the business model and the actual science. Because planting flags globally is great, but we need to understand what they're actually selling. The star product here is ANKTIVA, and the strategy is this cancer bioshield concept.
Exactly.
But they call ANKTIVA an IL-15 superagonist. Now, for those of us who, didn't get a PhD in immunology over the weekend, break that down. What does that actually mean?
So think of your immune system like a police force. In a healthy body, the police catch the bad guys, right? The cancer cells. But in cancer patients, the police are asleep at the wheel. Or even worse, they've basically been paid off.
Paid off by the cancer.
Yeah, essentially. That is what T regulatory cells do. They tell the immune system to stand down and just ignore the tumor.
So the cancer bribes the cops to look the other way.
Perfect way to put it. Now, older therapies, specifically the old IL-2 cytokines, they were like throwing a grenade into the police station.
Oh, wow.
Yeah, they woke everybody up, sure. But they caused massive collateral damage. They activated the good guys and the bad guys, and they were incredibly toxic. Patients got really, really sick.
Right. The whole cure is worse than the disease scenario. We've seen that a lot in early oncology.
Precisely. So enter ANKTIVA. It is a first-in-class IL-15 superagonist. So instead of a grenade, think of it as a highly specialized dispatcher. It specifically activates the SWAT team.
Which would be?
Your natural killer cells and your CD8 plus T cells. But crucially, it completely ignores the corrupt officers, the T regulatory cells.
Okay, so it calls in the special ops, but leaves the corrupt guys asleep. That makes total sense. And that differentiation means less toxicity.
Exactly. It's designed to be a partner therapy. It plays nice with checkpoint inhibitors that are already blockbusters, like Keytruda. It's not trying to replace them. It just makes them work a lot better.
Which is a brilliant commercialization strategy. You don't fight the 800-pound gorilla, you become its best friend.
Exactly.
So let's talk about the revenue drivers. The foundation here in the U.S. market is bladder cancer.
Right, specifically non-muscle invasive bladder cancer, or NMIBC. For patients who are unresponsive to the standard BCG treatment, they got FDA approval for that back in April 2024.
Right, but April 2024 is practically ancient history in biotech years. Why is the international explosion happening right now in February 2026?
Because the international wins are coming in fast. First, look at Saudi Arabia. In January 2026, they approved ANKTIVA. But here is the massive kicker. They didn't just approve it for bladder cancer. They approved it for metastatic non-small cell lung cancer.
Wait, hold on. Lung cancer?
Yes.
This was a bladder cancer drug in the U.S.
And that is exactly why this is such a huge deal. This is the very first approval worldwide for this specific indication. It proves that the cancer bioshield mechanism actually works across totally different tumor types.
That opens up a massive total addressable market. Lung cancer is huge compared to bladder cancer, but Saudi Arabia, how do they actually commercialize there? Do they have a sales force in the Middle East?
They established a subsidiary, but they partnered with Sagala Healthcare. These guys are heavy hitters. They handle distribution across the entire Middle East and North Africa.
Ah, so they plug into an existing network instead of building from scratch.
Exactly. And that same strategy brings us to Europe. The European Commission just granted conditional approval in February 2026.
For 27 countries. But again, my skeptic brain immediately thinks about the cash burn. Launching a drug across Europe with different languages, different health systems, that is a logistical nightmare.
It would be, but they signed a massive partnership with Accord Healthcare for the EU. Accord is deploying an 85-person sales force across 30 countries.
85 dedicated sales reps. That's not a small pilot program. That's a full-on, boots-on-the-ground rollout.
It really is. And Accord absorbs that overhead. So Immunitybio gets the product into European hospitals without having to manage 85 people across a dozen time zones.
That is smart. So the commercialization strategy is solid. But let's look at the operational side, because you dug up some really interesting facts about their manufacturing. They aren't outsourcing this.
No, and that's rare for a company this size. They are fully vertically integrated. They own over 1 million square feet of manufacturing space across California and New York.
Over a million square feet. I mean, owning physical factories is usually a massive capital drain.
It is initially, but think about the margin analysis. Biologics usually command 60 to 80% gross margins. By being vertically integrated, they protect that margin and gain massive pricing power. Plus, they're moving towards being cash generative right now instead of just burning capital.
Okay, before we move on, we have to talk about the pipeline expansion, because the current approvals are just the tip of the iceberg, right?
Oh, absolutely. The two big ones are glioblastoma and the BCG naive trial.
Glioblastoma is brain cancer, which is notoriously difficult. What did the phase 2 data from January show?
It showed highly promising survival rates in recurrent patients, which is incredible for that disease.
Wow. And the BCG naive market.
That's the real big prize. Right now, ANKTIVA is used when standard BCG fails. But the QUILT 2.005 trial is testing it as a first-line treatment. That trial is over 85% enrolled, and they expect a BLA filing by year-end 2026.
Okay, so the fundamentals are incredibly stacked. Let's pivot to the charts and price action, because the technicals are screaming right now.
They really are.
As of February 19th, 2026, the stock confirmed a golden cross. For those of you listening who aren't chart nerds, that is when the 50-day moving average crosses above the 200-day moving average. It is a major, major bullish signal.
Right. It triggers a lot of algorithmic buying.
Exactly. But here's my concern with the momentum beta. The stock is currently trading 170% above its 200-day moving average.
Yeah, that is a steep premium.
It's massive. It soared 42% just on this cluster of regulatory news. And usually when a stock gets that extended, gravity kicks in.
I agree, and frankly, a correction here would be completely healthy. The psychological state of the market right now is focused on this breakout to new highs. But because of that 170% premium, a pullback is expected.
So where does it catch support?
The 50-day moving average should act as dynamic support now, but the key takeaway for the technicals is the volume. The trading volume is highly elevated, which tells us this isn't just retail hype.
Right, it's institutional participation.
Exactly. The big funds are accumulating. The move has legs because it's backed by actual fundamental regulatory changes, not just a Reddit message board pumping it.
Okay, so shifting gears to how the market feels about this. Let's look at sentiment and market perception. What is the analyst coverage looking like?
It is very constructive. As of mid-February, DeBoral Capital analyst Jason Colbert maintains a buy rating with the $24 price target. And looking across the board, there are no recent downgrades to be found.
And looking at the news flow analysis we pulled, the top 5 recent stories are overwhelmingly bullish. 4 out of 5 are highly positive. You've got the EU approval, the Saudi partnership, the Golden Cross, and the analyst buy rating.
What was the 5th one?
The only neutral piece of news is just a standard announcement for their upcoming earnings date. So the media narrative is solidly behind them. But let's get into the speculative angles.
My favorite part.
Right. Because in the oncology space, M&A potential is always the elephant in the room.
Absolutely. You look at Big Pharma, BMS, Pfizer, they all have these massive patent cliffs approaching. They desperately need to bolster their oncology pipelines.
And ANKTIVA is positioned as a partner therapy.
Right. It's the perfect companion drug. It makes existing blockbusters better. That makes Immunitybio a perennial acquisition candidate. Why compete with them when you can just buy them and extend the life cycle of your own flagship drug?
It makes a lot of financial sense for a giant like Merck. But there's another speculative angle here regarding the actual supply chain. We are seeing a global shortage of standard BCG right now, aren't we?
Yes, it's a huge problem for urologists globally, but Immunitybio has their own recombinant BCG, or RBCG.
Oh, and they manufacture it themselves because of that vertical integration.
Exactly, so they can combine their RBCG with ANKTIVA. It's a massive shortage play. They're stepping into a vacuum that the market desperately needs filled.
That is a very unique catalyst. Speaking of catalyst, for those tracking the calendar, you need to circle a few dates. First is March 6th, 2026. That is the Q4 earnings release.
Right, and that will give us the first full quarter of post-approval data in the U.S.
Then in Q2 2026, we have the QuIL-LT 2.005 trial enrollment completion. And then late Q2 or Q3 2026, we have the potential glioblastoma FDA
A
filing.
lot of major events hitting in a very short window.
Yeah, it's a packed year. But okay, we've been very bullish so far. Now we have to look at the risks. What kills the thesis? Because biotech is notorious for crushing dreams overnight.
It is the ultimate high-wire act, and the biggest risk here is entirely about clinical execution.
Specifically, that year-end 2026 milestone.
Yes, everything hinges on that BCG-naive, the LA filing. The QuILT 2.005 trial has to deliver. If they miss their endpoints, or even if the FDA just turns around and asks for more data, the stock tanks.
Right, because so much future revenue is priced into the current momentum. A 6 to 12-month delay would completely derail the technical breakout.
It would be catastrophic for the momentum. And the same goes for the glioblastoma timeline. Accelerated approval is very rare in brain cancer. The FDA might look at the phase 2 data and say, great, now go do a massive multi-year phase 3 trial.
Which pushes any revenue from that indication back by years.
Exactly.
And we also have to talk about the competitive landscape. Merck and Bristol Myers Squibb are giants. What stops them from just pivoting and developing their own IL-15 superagonists?
Well, they could certainly try. But the mitigation there is that ANKTIVA has a serious first-mover advantage. We're talking a 5 to 7 year window before a direct competitor or biosimilar could reasonably catch up and clear regulatory hurdles.
Plus, as we mentioned earlier, it's a partner therapy. It's a rescue therapy. So they aren't fighting the giants head-on. They are co-opting them.
Right. But there is one more risk, and that's pricing. High-cost biologics always face massive payer pressure. Insurance companies and European health boards push back hard.
True, but if it keeps patients from needing complete bladder removal surgery, the health economics usually win out.
That's the argument they'll take to the payers, for sure.
Okay, we've laid out the science, the massive global expansion, the technical breakout, and the very real clinical risks. It's time for the final verdict. Based on everything in this deep dive, where do you land?
I'm coming in with an 8.5 out of 10 bullish score.
Wow, an 8.5. That is a very high conviction rating for a biotech stock. Give me the summary of why.
It boils down to 3 pillars. First, the regulatory trifecta. Having the FDA, the EU, and Saudi Arabia all give the green light drastically de-risks the asset. Second is the commercial infrastructure. The Accord partnership with those 85 sales staff completely solves their European distribution problem overnight.
And the third pillar?
Technical strength. The Golden Cross combined with clear institutional accumulation tells me the smart money believes the fundamental story.
Okay, so if you are listening and you want to know how to structure a trade around this, here is what the data suggests. The time frame you're looking at is a multi-quarter swing trade. You are basically positioning for the completion of that BCG-naive trial later this year.
Exactly. You want to be holding before those results hit the wire.
And what are the price targets to watch?
Near term, we are looking at $24 to $28, which lines up with analyst targets. But medium term, if that BCG-naive trial succeeds, we could see $35 to $45.
That is a staggering upside potential.
Right.
But remember the technicals. The strategy here should be an aggressive buy on pullbacks to the 50-day moving average. Don't chase the stock while it's up 170% over the 200-day line.
Yeah, patience pays off here. Be conservative and accumulate into the March 6th earnings date to see how the initial sales numbers look.
That's the breakdown on Immunitybio. Make sure you subscribe, like, and comment to support the show.
Thanks for joining us on this deep dive.
We will see you on the next one. Happy investing.